All right, good afternoon. Rain or shine, getting right down to business here. We are doing it live, doing more at 4 weekday afternoons. We are live right now on 790 KBC, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all your favorite podcast platforms. What just happened? Well, we've seen the biggest two-day stock market wipeout in stock market history. Over the past couple of days, $6.6 trillion wiped out. The markets have lost about $11 trillion since Inauguration Day in January. Today's loss was even worse than yesterday's when the markets were taken by surprise when President Trump rolled out tariffs on America's global trading partners that were much larger than expected. Tariffs and now recession risks remain front and center today. Even a stronger than expected jobs report, which came out an hour ahead of the opening bell, was not enough to lift the mood on Wall Street. The stock market closed today with big losses, with the Dow Jones Industrial Average ending the day in correction territory. The NASDAQ now in bear market territory. The Dow dropping 2,231 points. Yep, you heard me. 2,231 points to settle at 38,315. The S&P 500 plunging 322 points at 5,074. And the NASDAQ sliding nearly 1,000 points, settling at 15,588. Markets taking a hit this week after President Trump announced reciprocal tariffs, sparking fears that the tariffs will cause a recession and escalate a global trade war. The other big news, China retaliated today with tariffs on American products imported into China. Now that the dust is settled for the week, we see the Dow was down 7.9%, the S&P 500 plunged 9.1%, and the NASDAQ gave back 10% this week. All three of the averages booking their biggest weekly percentage drops since March of 2020. That was when the global economy was shut down and we went into a bear stock market at that time. The Dow ended today in correction territory. That is at least a 10% drop from its most recent high. The NASDAQ in bear market territory. That is marked by a steeper fall of at least 20% from the most recent high, which we just saw in February. While the NASDAQ composite at a record high of 20,056 back on February 19th, it is now down 22% since then as of today. And the Russell 2K Small Cap Index also now in bear market territory, dropping more than 25% since hitting a record closing high back on November 25th. Stocks closed sharply lower as President Trump's latest tariffs rocked Wall Street. Saw a big drop today and a big drop yesterday. Bitcoin, meanwhile, rising today as stocks recorded the biggest two-day wipeout in history. We'll be taking a closer look at that later this hour. Bitcoin right now, let's bring up the latest here, hovering at around 84,000. I'll discuss the crypto moves later this hour with crypto expert ELEANOR TERRETT, journalist and co-host of the Crypto in America podcast. A couple of rays of sunshine in all of this for consumers. Oil has plunged to the lowest we've seen since 2021. Investors trying to take in the potential economic shocks of the widespread tariffs. Price of oil has moved lower. It is hovering at around $62 a barrel. Let's see if that lower price is finally reflected at Southern California gas pumps. And mortgage rates have pulled back as the yield on the 10-year note, which impacts fixed-rate mortgage rates, pulled back to 4%, fueling speculation that there might soon be a refi boom, believe it or not. With the rates, with the yield on the 10-year note back to 4%. We'll get an update on mortgage rates and real estate from real estate and mortgage expert Jeff Lazerson, the president of MortgageGrader.com, also Orange County Register real estate columnist. He'll be joining us live later this hour. But first, on your money, the markets, the economy, tariffs, and the whole works now. Joining us live is Matt KRANTZ, writer and editor at Investors Business Daily. He's personal finance and managing editor at Investors Business Daily, the sister publication, by the way, of the Wall Street Journal. Matt KRANTZ, thank you very much for taking the call on this epic week here.
Thanks for having me.
Take it from the top. Give us your reaction to today's ongoing sell-off.
I can't help but think of an old analogy that Ronald Reagan, of all people, had, where he was talking about being in the boat in the middle of a lake with a bunch of friends. One of the friends decides to take out a shotgun and blow a hole through the bottom of the boat. What you don't want to do at that point is get out your shotgun and blow another hole in the boat. You want to try to patch up the hole. But it feels like right now we have politicians that are just determined to sink the boat, and investors do not like what they see. it's just a bloodbath. I mean, I looked at my own portfolio and I was just shocked at how much money I've lost in 2 days.
Well, I'm sure you're going to have a beer later, insulted with your tears, as most other people will, looking at their portfolios. This coming off of a rough first quarter. I know you've done a great job chronicling that, and now the worst 2 days in stock market history. It's of course, we thought we saw the worst during the pandemic days when the whole global economy was shut down.
And that was totally understandable, like a scary virus that's infecting people and killing people. That was terrifying. This is weird because it's like self-inflicted. It's almost like if you get a bee sting, you don't cut off your arm. I mean, it's ridiculous. And I think I'm sensing a change in the tone on Wall Street too. I think a lot of Wall Street was in support of Donald Trump because they thought he was going to have this pro-growth agenda, lower taxes. Everyone likes lower taxes. They thought the tariff thing was just kind of a sideshow. But it's turned out that the tariffs have become the main event, and nobody likes it. I'm not really sure where this is coming from. I'm not sure who the administration thinks they're benefiting with this, but it's definitely not going to be anyone that has money in the stock market.
Call it a tariff torpedo this week on the air live with Matt KRANTZ at Investors Business Daily. President Trump, though, expressing confidence about using tariffs as a tool to achieve gains. And it should be noted back during the Reagan years, coming off the Carter administration, the early Reagan years had very high interest rates. As President Reagan at the time was trying to get inflation under control, and then things took off later. There's been a lot of talk about this short-term pain for long-term gain. What are your market monitors saying about that?
Yeah, so with interest rates, it makes sense. When you've got high interest rates, you have to buck the bronco, and the only way to do that is to raise rates and really kind of slow down the economy so that you can bring inflation down. That's kind of in the economics textbooks, but also in the economics textbooks are that tariffs are generally bad for everybody. All they do is they drive up prices for imports, which allows domestic producers to become fat and lazy and not competitive. It's just shocking to me. We've spent the last 90 years building this beautiful free trade system, which has benefited just about every American alive today. And we've been able to dismantle it in 2 days. It's just sad.
On the air live with Matt KRANTZ at Investors Business Daily. Let's take a closer look now at some of what were the high flyers that got their wings clipped again today. NVIDIA below $100 now at 94 and change, plunging more than $7. Tesla down more than 27, almost down $28 today at 239 and change. Apple, a Wall Street darling, down nearly $15 at 188 and change, and the list goes on. Give us your views of the tech stocks now in bear market territory.
Yeah, so the tech, amazingly, is the worst performing sector of the 11 S&P sectors this year. The technology sector is down almost 22% year to date. That's the worst. It's only close. The only second closest is consumer discretionary with a 19% decline. What's amazing to me is there's really nowhere to hide. Consumer staples are down 0.2%, and utilities are down 1.5%. That's not that bad, but still, it's just those are still losses, and it's red across the board. I mean, there's nowhere to hide. It's just amazing. I'm trying to see if there's anything that's positive. Yeah,
I found something. The volatility index up 51% today. The Wall Street Fear Index, the volatility index, the VIX index up 51% today.
Yeah, that's pretty shocking. It just tells you how much fear there is out there. That's why I know some people that are the fans of the tariffs are trying to talk about, well, oil prices are down, and that's great. But the reason oil prices are down is because the Wall Street's pricing in a global recession, if not worse. So if no one has a job, no one's going to have to drive to their job. So of course, oil prices will fall. But that's not a good reason for oil prices to fall. So it's just brutal. Bitcoin's down about 10%. You've got bonds are up slightly. Gold is up, and that's another one of these things where people like to talk about, well, gold is up. Well, that's a bad sign. When people are buying a shining rock in the ground because they're afraid of losing their money, that's not a bullish indicator.
Remember during the Great Recession days, people were talking about diversifying, putting some money under the mattress, in the cookie jar, and some in your pocket. That may have to revisit some of these diversification strategies. Gold did pull back from its recent record high, down more than $65 today to $3,056 and change. Gold has been rising, of course, traditional inflation hedge, and nowadays there's a lot of concern about how these tariffs may increase prices. What about autos, which got a lot of attention this week? A lot of predictions here on how the tariffs might impact stickers at the auto dealerships. Some cars may go up $5,000, $10,000, $15,000, and the auto stocks took a hit. They were one of the early ones to see the reaction there. What about the car names, which includes Tesla, by the way?
Yeah, so I mean, like you point out, the prices are going to go. They will go up. Probably more than people think, because a lot of parts kind of go back and forth between Canada, the U.S., and Mexico a couple of times before they get assembled. Who knows how they're going to track all this, but we do know that prices are going to go up, and higher prices are not good for sales. And Ford Motor Company's down 3%, but it is ironic that Tesla is down 41% this year, 41, and that's with a tariff that's going to protect them against some foreign competition. So I'm not really sure. The thing that I think is really funny, though, is, we had this talk about making America great again. Guess what market's up 7% this year? China. China's been seeing this coming. They've been trying to build on their independence for years because they were afraid of something like this happening. So they're kind of ready for it.
On there live with Matt KRANTZ from the authoritative Investors Business Daily on this epic day here, where we've seen the Dow plunge more than 2,200 points coming off of yesterday's big drop, racked up the worst two-day loss in Wall Street history. President Trump today, by the way, signing an executive order to keep TikTok running here in the U.S. for another 75 days to give the administration more time to broker a deal to bring TikTok, which is the most popular social media platform, under U.S. ownership. Looks like Beijing hit the brakes on a deal yesterday after the president announced the tariffs. Any thoughts about how this is playing out and who might ultimately get TikTok?
I don't think anyone knows. In an interview today, it sounded like Microsoft was backing away, but there's rumor that Walmart's interested. What kind of boggles my mind is that you have a president who's watching people's 401ks actually incinerate. He's over there messing around with TikTok. It makes no sense. And I think he's playing right into China's hands. I mean, they've just been expecting this. I mean, it's just amazing. But in terms of who's going to buy it, I bet you Meta's going to try. That stock's down 14%. They kind of need a little bit of a lift. But it's really hard to say at this point.
Among the names you just mentioned, I just pulled up Walmart, down more than 4 today to 83 and change. Meta, which, of course, was a high flyer earlier this year, down 27 now to 504.73. Any ports in the storm?
I think people are talking about make Europe great again. This might be the kick in the pants they need. They have so much intellectual property over there, and they haven't been able to commercialize any of it. Europe's only down like 1%. We're down, tech stocks are down 22%. So they've been relying on us, and I think they've gotten a little lazy, not capitalizing on the know-how and the intellectual property that they have. So they're going to spend more on defense. They're going to spend more on innovation, and they're already going to start hiring away some of our scientists that we've laid off this week.
And it looks like some IPOs were put on ice given this market volatility. Klarna, for example, pausing its planned IPO following the tariff announcement. StubHub also delaying its IPO. Tell us more about the other impact we've seen this week.
Yeah, the IPO market's super, super sensitive to like market sentiment. It's kind of the first place to go when people are feeling good, and the first place they leave when they're feeling kind of bad. So I'm not surprised to see it kind of pack up for a while. It's a shame because it was starting to kind of perk up a little bit. And this is what America's so great at. We're so great at creating these new innovative technologies. We used to have one of the greatest capital markets in the world where people from all countries all over the place felt comfortable investing here. We were ruled by the rule of law, and it made people feel good about their investments. When all that goes out the window in 2 days, it just has huge impacts. And I think IPOs are going to be hit hard from this.
All right. One ray of sunshine that we'll be talking about later this hour with a real estate expert and mortgage expert. The yield in the 10-year note is back suddenly to 4%. That's one that impacts the fixed rate mortgage rate. So now there's talk that with the rates coming down, there could be a refi boom, and that would certainly help the real estate sector.
That is true, and I'm happy for people who can refinance, and that's great for them because they're going to need the money to pay for everything else. But it's one of these mixed blessings. When you live in a country where everyone just wants to get their money back, it's like 2%, 3% interest. That's kind of a broken economy. That's not the kind of economy where you create brand new companies like Google, Facebook, and Microsoft, which celebrated its 50th anniversary today. To me, that's just a sign of kind of people hiding. And it's great that homeowners will benefit. I think that's great, but it's kind of a mixed blessing like gold and oil.
I don't know if there was too much celebrating anywhere today. Microsoft, let's bring that one up here. We haven't mentioned it yet, down more than 13 to 359 and change. What about home? Go ahead.
Yeah, Microsoft's done a great job. I just listened to a podcast about their history. It's just amazing how far they've come in 50 years. Bill Gates, the co-founder, is only about 70 years old, which is just unheard of to create the world's most powerful company. He did an interview today, and I thought it was just fascinating. He played it very careful, but you could tell Microsoft was kind of one of the very first companies to go global. And it's one of the first companies that was able to create a global standard in technology. And that was largely because of free trade. And all Americans benefited from that, especially ones that own stock in the S&P 500 or Microsoft. So Bill was very careful, but he clearly doesn't think that kind of what he's seeing now is conducive to creating great companies like what he created.
And certainly one of the richest people in the world will bring up the billionaires list. And if you're feeling bad about your portfolio today, we'll take a look at the top list and see how many billionaires lost billions of dollars today. What about Apple, impacted by China, of course, closing down nearly 15 back to 188?
Yeah, that stock is getting crushed. I didn't think it would get hit so bad. It's down 25%. That's just amazing year to date. You got to really hand it to Warren Buffett. He started unloading his shares in Apple, back in the third quarter of last year. He must have seen the writing on the wall, and he's kind of laughing all the way to the bank. He also sold his S&P 500 last year, and at the time I thought that was a little bit strange because at that point we were talking about the Trump bump, but boy, he was right, and Apple is just another case of just complete annihilation. I think the CEO is trying to cozy up with Trump, but I'm not really sure how much good that's going to do when you have these enormous tariffs with their key production partner, and it's just staggering.
NBA veteran Jim Jackson takes you on the court.
You get a chance to dig into my 14-year career in the NBA and also get the input from the people that will be joining. Charles Barkley.
I'm excited to be on your podcast, man. It's an honor.
Spike Lee, entrepreneur, filmmaker, Academy Award winner.
Nixon.
So, now you see, I got you. But also how sports brings life, passion, music, all of this together.
The Jim Jackson Show, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.
You're a Prince for taking the call here this afternoon. I know you're going to have a lot to write about. Any specific columns that are coming up that we can look for this weekend?
I'm just infatuated with this idea that the tariffs are already helping China and Europe, and we're going to be hearing more about that, I think.
Very interesting, Matt. We'll be looking forward to your coverage on an Investors Business Daily in print still, as well as online, of course. Matt KRANTZ, writer and editor at Investors Business Daily, personal finance and managing editor at Investors Business Daily, the sister publication of the Wall Street Journal. Matt KRANTZ, thank you very much for joining us live here this afternoon.
Thanks for having me.
Out to the freeways we go now, 790 KBC. Mottek On Money continues here, 790 KBC. Worst 2 days in stock market history. The Dow down another 2,231 points today. Yep, you heard me. Down 2,231 points today, settling at 38,315, a one-day drop of 5.5% on top of yesterday's big loss. The S&P 500 down 322 at 5,074, a drop of just about 6%. And the NASDAQ plunging 963 points at 15,588, also a drop of nearly 6%. Even gold took a hit today after hitting record highs recently above 3,100, down 65.60 today to $3,056.10 an ounce. And silver down more than $2 today, down $2.44 at $29.52. The price of oil plunging as well, down nearly $5 at $62.32 a barrel. Taking a look at the cryptos now, we see Bitcoin hovering just above 84,000 after a wild ride this week. We'll be focusing on cryptos coming up in the next half hour with ELEANOR TERRETT, who's a crypto expert, and she'll be joining me live. Ethereum moving slightly higher now to 1,819, and we see Doge at the moment at 17 cents. Among the Mag 7 names, NVIDIA shares plunging more than $7 to $94.31 a share. Tesla down nearly 28 at $239 and change. Apple down nearly 15 at $188 and change. And Microsoft down to $13.27 at $359.84. If you think you had a rough day, Elon Musk, $15.7 billion right out of his pocket. He was one of the big losers today among the, he's, of course, at the top of the billionaires list. Larry Ellison of Oracle fame lost $10.8 billion today. Warren Buffett, the famed investor, out $10.7 billion today. And Mark Zuckerberg, head of Facebook Meta, lost $9.2 billion today. In a rough day for Jeff Bezos. Amazon guy down $6.7 billion today. And now the latest news here in 790 KABC. Mottek On Money continues here, 790 KABC. Extended coverage of the stock market sell-off this week and the market reaction to the big tariff announcement we've seen this week. Part of that reaction, mortgage rates have suddenly plunged. This as the yield in the 10-year note, which impacts fixed-rate mortgage rates, has pulled back to 4%. And joining us live now, mortgage expert, real estate expert here in Southern California, Jeff LAZERSON, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, thank you very much for taking the call here this afternoon. And tell us, how are the mortgage rates looking right now?
Pretty darn good, Frank. We haven't seen the 10-year down to 4% since September of last year. So what that means in rates is the 30-year fix is at 5.75% today at 1 point cost. That's really, really good. Pretty soon we're going to be into the medium or low fives. The 15-year fix is at 5.125% at 1 point, and FHA and VA is at 5.25% at 1 point. Those are for the government loans, and then the high balance Fannie Mae loans and Freddie Mac loans, 6.125%, both for the 30 and 15-year. So things are just coming down.
Remember, you were you described yourself as the Maytag repairman for a while there. Business was pretty quiet. Were you getting some more calls today?
Well, actually, Frank, the last few weeks, it's really been popping on the purchases of, quite a bit. But now what's happening now with the stock market, people are starting to freak. And I did get some calls today. And I think what we're going to see is a run on either cash out refinances or equity lines of credit, because, people either have lost their brokerage account savings or their 401k savings, and they will want to have some, money in reserve. So my expectation is that we're going to see a big run on the mortgage business.
Very interesting. We're on the line with Jeff LAZERSON, president of MortgageGrader.com. And Jeff, is there going to be a refi boom here with rates coming down like this?
I think it could be. Frank, remember, there's a lot of people out at 2% and 3%, and I don't think even best case that the rates will get, maybe they'll touch 4 7/8 or something. But there's a whole bunch of people that still won't touch it because they had really low rates from the COVID days. So it's just the people that have taken out a loan in the last 1 or 2 years, maybe the last 3 years, will want to refinance the loan. And the interesting thing is, though, if you ever want to know about the future of the economy, the mortgage people are the canary in the coal mine. We've been really struggling the last couple of years. It's been very, very quiet because rates are up and prices are up. And, I think that's what's going to happen to the rest of the economy. I think it's going to be a icky slowdown, and, rates will come down and our business is going to start picking up again.
This at a time when home prices are still at or near record highs, especially here in Southern California, with obviously supply impacted here in the Los Angeles area by the devastating fires this year, with thousands of homes destroyed. What do you see ahead on the home price front?
So, Frank, the price or the homes available are still light, but it's a little bit better than it was this time last year. And there's still multiple offers on the well-priced properties. Everybody that's buying a property is in a multiple bidding war. So the properties that are sitting are just overpriced turkeys. And because the multiple bids, the prices are going up again. Not a lot, but they are going up, and I would expect them to go up even more because the lower rates will goose the prices, and more people will run in, to want to buy, and you'll see prices spurt up just all over again.
On the line with Jeff Lazerson, president of MortgageGrader.com and Orange County Register real estate columnist. Anything else new in the mortgage business? Any new products or anything else you'd like to bring to our attention?
As a matter of fact, Frank, there is one. There's a really interesting loan now for reverse 1031 exchanges where you can buy your up-leg property first and pull cash out from the property that you're going to sell and have that as your down payment. So you find your property first, you pull the money out of the other property through a refi, and then you go back and sell the down leg property. And it's pretty interesting because people, when they're doing 1031 exchanges, either they have to sell their down leg property first, then try to find something, or they have to raise down payment money some other way. So it's a pretty interesting loan program for investors.
How tough is it to get that?
I don't think it's tough at all. I mean, if people are investing in real estate, they're pretty sophisticated. They tend to have very good credit. They tend to have very good income, and they tend to have a lot of rental properties too. And so this is really a great way for them to know what they're getting into ahead of time before they have to relinquish their old property, because still with the sparse amount of properties available on the market, this would be just a really big help for them.
Very interesting. And what about any other products? And as a matter of fact, what are you going to be writing about this in your column this weekend?
Oh, this weekend, what am I writing about? You know what? I'm going to no, I won't keep it a secret. So the Fannie Mae blacklist, I wrote about these loan programs that people that have those condo complexes that are non-warrantable where you can't get a Fannie Mae loan. I talked about some other loan programs that help people get into those properties, because Fannie Mae is knocking out 300 to 400 condo associations every month. They're blacklisting them, so more and more associations can't get regular Fannie Mae pricing.
It's part sports.
We have football on the brain.
Part pop culture.
Dennis Leary.
True or false? You refuse to wear a glove with Mickey Mantle's signature on it for the movie The Sandlot.
The Red Sox blood, the Bruins blood, they run deep.
And in the best celebrity interviews.
Robert De Niro here on The Rich Eisen Show. How are you, sir?
Just got over a 24-hour virus.
The antidote is to appear on The Rich Eisen Show.
There you go. I would have just done it earlier.
And you've got The Rich Eisen Show podcast.
There is a medicinal quality to appearing on this program.
Follow and listen on your favorite platform.
That's very interesting, and certainly homeowner association dues have become a very big issue in Florida, especially where the real estate business appears to be tanking. Certainly the air has been coming out of those condo prices there, largely because of assessments and difficulty to get insurance and so forth. Are we seeing a similar situation developing here as well?
Well, 100%, Frank. It's crazy, and the prices are crazy too. I'm funding a loan for a client, a one-bedroom condo in the city of Orange, one bedroom, $505,000, and just unbelievable. But back to the assessments, the association fees on average now are coming in about $500 on average. I've seen stuff over $1,000 for the association fees. And then those assessments can be thousands and thousands of dollars. So be very careful when you get into an older condo complex, because there might be some big bills coming.
That's for sure, Jeff. Well, thank you very much. We will be looking for your column this weekend in the OC Register and all of the Southern California News Group publications here. That is Jeff Lazerson, the president of MortgageGrader.com, also OC Register and Southern California News Group real estate columnist Jeff Canary Lazerson. I think you named yourself Canary in the coal mine, so we'll call you Canary here today, Jeff. Thank you very much for that laser-focused update, as always. Appreciate it very much.
Thanks, Frank. Take care.
All right. Thanks very much. Ray of sunshine there in the real estate business as mortgage rates have come down to the lowest we've seen since last September, he said, after the yield in the 10-year note plunged to 4% following this week's stock market sell-off. We'll take a closer look at cryptos here in just a moment. But first, the latest on your ride this afternoon on 790 KABC. Mottek On Money continues here, 790 KABC. Yesterday, we had the worst one-day drop for the stock market in 5 years since the bad old days of the pandemic. And today, it happened again, except the drop was even bigger. Biggest two-day drop in Wall Street history, with the Dow down today by more than 2,200 points. The S&P 500 gave back more than 300, and the NASDAQ plunged nearly 1,000 points. We saw a wild ride for cryptos, too, including Bitcoin, which held up pretty well in the face of the stock market sell-off today. Bitcoin right now just above 84,000. And joining me live now is ELEANOR TERRETT, who is a journalist and co-host of the Crypto in America podcast on X, formerly known as Twitter. She's at ELEANOR TERRETT. ELEANOR, thank you very much for taking the call here this afternoon.
Thanks for having me again, Frank. Good to be with you.
Wonderful to have you with us here. And you follow this very, very closely. So let's focus on Bitcoin here at the moment. It's been bouncing around all week. Got, below 82,000 yesterday. It's just about at 84 here right now. Give us your view of what happened with Bitcoin, first of all.
Well, you mentioned right before I came on that the stock market is clearly tanking, but despite the carnage in the equities market this week, Bitcoin investors are celebrating because the asset they believe is digital gold is starting to look more and more like that store of value, safe haven against economic uncertainty they've always claimed that it is. So, today, as you just referenced, the stock market had its worst decline in 5 years and the biggest two-day drop on record. Even gold, which has historically been considered a safe haven, took a hit. But Bitcoin, XRP, Solana, and Dogecoin, while taking a hit earlier in the week, all managed to stay in the green today, when you've seen them tend to correlate with tech stocks and the broader equities market before now. And Frank, Bitcoin evangelists are seeing this so-called decoupling as a good sign that their big bet on Bitcoin being the better version of gold is paying off. And just a quick comparison for you here, overall Bitcoin fell around 0.5% this week when all was said and done. The Dow lost nearly 8%, the S&P 9%, and the NASDAQ 10%. So not a pretty picture for traditional investors.
Thank you for that excellent reporting. ELEANOR TERRETT, journalist and co-host of the Crypto in America podcast, live with us here on Mottek On Money on 790 KABC. And take a look at Ethereum. That one had a tough week as well, but held up pretty well today. And you mentioned Doge, which also held up pretty well. Anything else that's on your radar screen that is noteworthy among all the big names out there?
Well, yes, you mentioned Ethereum, XRP, Solana as well. Those are the sort of U.S.-based cryptocurrencies. As Donald Trump puts it, those are some of the cryptos that he is planning on putting in the digital asset stockpile. So U.S.-based cryptocurrencies did pretty well today. Something else that's interesting is the Bitcoin ETFs have remained net positive with renewed inflows seen in late March. So that's according to asset manager Van Eck, who has a Bitcoin spot ETF. So they're all over those trades, and they're seeing this pretty much overall net positive feeling in the industry, and also it's kind of correlating into the ETFs at the moment as well, which is pretty interesting.
Last time we spoke to you, you had a front row seat in Washington for the Senate confirmation hearing of Paul Atkins, the nominee to be the Securities and Exchange Commission chairman. Where do things stand with that?
That's right. Well, the Senate Banking Committee voted to advance Paul Atkins' nomination to the full Senate. Notably, no Democrats on the committee, including Elizabeth Warren, voted for Atkins. So no Democratic support, but with that Republican majority, his vote will be considered by the full Senate at some point in the near future. It will have to be scheduled by the Senate Majority Leader, John Thune. So the crypto industry will be waiting on tenterhooks to see Paul Atkins get through and start his tenure as chairman of the Securities and Exchange Commission. All
right, it's clear right from the start, President Trump wants this to be a crypto-friendly administration, including the Securities and Exchange Commission chair and all of the advisors that he's put into place, very crypto-friendly. So in all this, what do you see ahead for for crypto?
Well, I'm looking at stable coins this week, Frank. It was a big week for stable coins. Those are the cryptos that are backed one-to-one by the dollar. The House Financial Services Committee passed the Stable Act in what was called a marathon 13-hour markup that went late into the night on Wednesday evening. So reporters and committee members were literally there from 10 a.m. to 11 o'clock at night, passing that bill out of committee. So now we have two bipartisan pieces of stable coin legislation that's passed out of their respective committees. So that's certainly noteworthy. And then today, the SEC Division of Corporation Finance released guidance on dollar-backed stable coins, saying that they are generally not offered or sold as investment contracts, which means they probably do not fall within the SEC's jurisdiction. Now, receiving guidance from a Wall Street regulator may sound really mundane, but the crypto industry gets excited about these things because for so long there was no clarity whatsoever on any area of the crypto market, really. The only guidance was from former SEC Chair Gary Gensler, who said that most digital assets are securities, which of course now we're seeing is not the opinion of the broader SEC under this new commission.
Another big story today, a bunch of companies, given the volatility we've seen in the stock market, have delayed their IPO plans. What's ahead in the crypto space as far as initial public stock offerings are concerned?
Yeah, so the IPO market for crypto is set to be pretty hot this year. Circle, it's the company behind the U.S. most widely traded stablecoin called USDC. It filed for its IPO earlier in the week. It's choosing to list on the New York Stock Exchange. For Frank, as you know, I worked down there for 2 years, so IPOs on the NYSE floor are pretty grand, and they're chasing a $5 billion market valuation. It's exciting because this really is sort of the first big crypto company to file to go public since Coinbase did it in 2021, and they chose the NASDAQ for their IPO. And market watchers are expecting more companies like Exchange Kraken, another company called Anchorage Digital, to go public now that the regulatory environment is that much friendlier here in the U.S. So there'll be a lot to watch regarding crypto companies going public, this year, but also in the 3-4 years of President Donald Trump's presidency.
Terrific, Eleanor. I know your dad is also a renowned broadcast financial journalist. So how's he doing these days?
Oh, he's wonderful, Frank. Thanks for asking. I'm pretty sure he's actually listening to our broadcast right now, and he's actually doing some work for WABC Radio here in New York City with the legendary John Catsimatidis. So like you, he has gone back to radio, and he's loving it. So I think I'm making him proud right now, hopefully.
You did terrific, Eleanor. Thank you very much, and all the best to you and your family. And thank you, Dad, for tuning in to this special broadcast here on such a big day. Eleanor TERRETT, journalist and co-host of the Crypto in America podcast. You can follow her on X, formerly known as Twitter, at Eleanor TERRETT. Eleanor, thank you very much for taking the call here this afternoon.
Thank you, Frank. Have a great weekend.
You too. Thank you very much. Bitcoin just above 84,000 here. We see the Dow plunging 2,231 points, selling at 38,315. The S&P 500 down more than 300 today at 5,074. And the NASDAQ down nearly 1,000 at 15,588. The worst two-day sell-off in stock market history and the worst one-day plunge we've seen today since March of 2020. This is Mottek On Money on 790 KABC.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of the Sean Ryan Show.
September 11th happens. What is the first thing that went through your head?
September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope?
Just learning how to find a new normal.
One of the most tragic events in American firefighter history.
You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.